Well, markets have had some macro factors and they do cause fluctuations, right? We've certainly seen that. What do you need to keep in mind during a very volatile time? Let's bring in Arwen Becker, owner Becker Retirement Group, a pro here on this. Arwen, obviously you've had so many years of planning for clients. At this point, after we've had the COVID, this was a huge, what do they call it, a black swan event. I mean, nobody could have expected this. But there were some buying opportunities. But what are some concerns that clients are now concerned about going forward?
Well, Nicole, seasons change in every area of life. I mean, we're always facing that. Sometimes things are going really well mentally and emotionally and physically and financially. And then those challenges come, and those challenges come to us all. So the question is, how do we prepare for it, right? And yes, our clients, of course, have been asking us, what is it that we should be doing? But the fundamentals are still the same. We have to have a good long-term strategy and make sure that we are planning with the end in mind. We're not planning with the micro little moments in time where things are volatile. So making sure that we first start with just a good, solid plan that keeps the long term in mind.
Right. So that being said, doing this long-term planning, I mean, you're going to have to account for the fact there are going to be some hiccups or good days or bad days. Do people get very nervous? Are there mistakes that you see based on certain market climates? Are you seeing that now?
Yes, people do make mistakes. I think that the biggest mistake that a lot of people make is making an emotional decision when there is a lot of volatility. Good quality planning means that when times are good, or if they're not good, a lot of the fundamentals are still the same. So, especially if we're looking at long-term planning and trying to temper the volatility, a lot of that is going to be being broadly diversified. So, of course, what happened in 2008, real estate took a massive hit, but things like consumables, we knew that we were still needing toilet paper and we were needing soap and we were needing those things that were the basic fundamentals of just everyday life. And so there's a lot of things that we can do to make sure that we're prepared that if something happens over here, even if it's unexpected, like you said, like a black swan event, like a pandemic, that we still have other areas within our portfolio that are going to be able to temper that volatility.
And look, there's no, real cookie cutter retirement plan or investment plan because each person is different and their costs can have a variety. Sometimes there's the unexpected costs. So when you're advising clients in this environment, or I guess any environment, what are some of the themes or questions that you ask them so that they can better prepare and make an investment portfolio that they're happy with in 5 years, in 10 years, and 25 years?
I think the most important thing is making sure that they know where their risk tolerance is. I think there's a lot of great advisors who can really identify what truly your emotional capacity and your financial plan's capacity for risk is. So having a very clear understanding of what that means in dollars and cents as to what you own. So how much am I willing to put on the line and potentially lose in a market decline or with some volatility? So understanding what the capacity is and then making sure that you're rebalancing. That is such a huge piece, especially right now as we've been on this magical bull run for so long, that we need to make sure that if we are really heavy in equities, that we're still rebalancing throughout this process, maybe every 12 to 18 months, because as things overperform or really well performers, there might be other areas of your portfolio that are underperforming. And so making sure that we are continuing to dial that in and keep that very consistent for what you as the investor specifically can handle and what is going to be the best for the long-term view of your plan.
Are you still finding quickly, I don't have that much time, Arwen, I'm sorry, but just a final thought. Are you still finding people still do a variety of maybe some stocks and some bonds?
Absolutely. Diversification is just such a fantastic piece to be able to help out with that volatility. No doubt about it.
Yeah. Absolutely. I mean, sometimes you want to take a little more risk with some of the stocks, and the bonds can be a little bit more of a safe haven. Arwen, it's always nice to see you. Thank you so much for being with us today. Arwen Becker, owner, Becker Retirement Group. Thanks, Arwen.